Welcome to another fascinating episode of the Charlie Shrem Show, everyone. I'm super excited to have you. I am your host after 5 years continuously going through Bitcoin and crypto. I'm Charlie Shrem, and today we're delving into the world of Bitcoin, DeFi, and the heartbeat of the crypto universe. Yet DeFi has become somewhat of like a catchphrase over the last year or so. Could you guys believe it? I hope everyone's having a really good summer. And it seems like more and more the focus is on converging all these different worlds together: blockchain, crypto, DeFi, Web3. Somehow we'll see over the next couple of months some sort of like watershed crossover moment, kind of like when the Blackberry first came out or when the iPhone first came out. Today, to talk about all these subjects, we have some extraordinary guests who are reshaping this landscape. We have Bob Baxley, who's a super tech whiz, the core builder at Maverick Protocol. We'll get his insights on how he's maneuvering the complexities of the AMM smart contract, automating liquidity, reconcentration world, and contributing to the creation of more liquid on-chain markets. We need more liquid on-chain markets so real-world assets can then be brought on-chain. And then we have an awesome guy. He's a super good friend of mine. He's back on the show, Paolo Ardoino. Next, we have Paolo Ardoino, an amazing guy. He's the CTO of Tether and Bitfinex. One of the founders. His acumen in the realm of stablecoins, Bitcoin, and digital asset trading is matchless. We'll be discussing Tether's past, present, and future, the regulatory developments, what I think Tether should build. I asked Paolo if they're going to be building some of these things, and I hope they do. If you want to get some insights, the knowledge that he dropped was just alpha. And then finally, last but not least, we have a duo. Actually, so we had four guests. We had Shingo and Adam Lavine, the co-founders and co-CEOs of Ethos. Ethos is one of the only ways that you can actually today do DeFi without having to give up any of your private keys. You can enter the DeFi world but not have to put any of your private keys in. And they explained how in the world they do that. They've been around the block. They're both have been working on self-custody since the early days of Bitcoin. And these conversations have been nothing short of insightful. We brought you an action-packed hour episode today. You learned a thing or two about all the intricacies of Bitcoin and DeFi. Please make sure you subscribe, leave us a review. I love you guys, my listeners. Buckle up for a ride through the crypto cosmos. Today we got Bob Baxley. Bob, thank you so much for coming on the show today.
Hey, Charlie. Yeah, thanks for having me. Happy to be here.
You're the core builder at Maverick Protocol. Really cool project. You guys launched and very quickly grew. To give a little bit of background about yourself, you're a technologist, entrepreneur, builder of technology companies. You're one of the core builders, essentially like a CTO of Maverick Protocol, which is building a new AMM primitive that allows LPs to automate liquidity all over different blockchains, try to take different strategies, and at the same time make it more efficient. You guys launched some cool announcements this week, being able to do like a partnership with ZK Sync to make that a lot better of a scaling solution. We've talked about that on the show a couple of times. But when you guys launched in March uh, on Ethereum, you guys launched with some pretty high profile LPs like Lido, Liquidity, and a few other ones, and you quickly became like, I don't know, like a top 10 decentralized exchange by volume uh for a while there within like a month or two. What's going on? Tell us the backstory and how did you get to that point?
Sure. Yeah, so we built a new AMM. So it's really a step change in AMM technology. We've got more degrees of freedom, new degrees of freedom compared to existing AMMs. So you think about the innovation in the AMM space. We went from UniV2 style AMMs, to curve stable swap to UniV3 range AMMs. And Maverick has built a dynamic distribution AMM. And that lets LPs get higher capital efficiency, especially for stable pairs and LST pairs. So think, Rocket ETH, WST ETH, or LST pairs. There's really no good AMM other than Maverick to LP those pairs because it's hard to stay concentrated as an LP for a pair where one side of the pair is moving in price relative to the other. So the LST side is going to appreciate, say, 4% a year as it accumulates those gains. And so I think the way that Maverick is getting a lot of volume is even with a little bit of TVL, the liquidity is very concentrated, and that leads to lots of swaps, and that turns into lots of volume.
Why is TVL like not a good measure for the success of a project?
I think TVL is an okay measure. I think it's just one component though. We're finding so one of the things that Maverick, one of the users is really protocols. So I think LST protocols, like Lido, Swell has got a big doing a lot of activity on Maverick right now. For instance, they just released Sweeth, which is another LST. So if you're a new protocol, a new LST coin, say, and you want visibility, you want your coin in circulation, you need to get it in pools. You need to get it in pools that have activity.
Yeah.
Just dumping a whole bunch of dead TVL someplace doesn't help you. You need the activity in order to get on Chainlink. You need the activity in order to have enough volume to support, lending on Euler and Aave and these sorts of markets. So volume becomes really important for protocols.
It's really interesting because it used to be that you could just, open up a pool on Uniswap and add some liquidity to it on either side, and then you would have LPs kind of jumping in and creating this pool that people can buy into and folks can sell into. And just for those like an AMM stands for an automated market maker, and that allows for like in traditional financial markets, you have how big do you think are traditional financial markets? How much money is flowing in them compared to the DeFi world right now?
It's orders of magnitude bigger,
Orders of magnitude, like 100 times. Like we're not
yeah.
even DeFi is not even at the cusp. We're talking about like money that's traded through it, but essentially in all those traditional markets, market makers facilitate all this trading in the real world. They provide liquidity to an exchange, and we've covered this so many times. We've actually covered like the growth of AMMs and everything. The one of the first ones was Uniswap, and we've talked about that was like a huge a huge change in the way the world looked at crypto, because all of a sudden it wasn't like you had to put listed a coin on a centralized exchange and rely on centralized market makers like in the real world, but you could allow normal people like you and I to provide that liquidity and start to earn real yield. And when a lot of people talk about earning real money within crypto, these are the type of things that they're talking about.
That's right. Yeah. So, the traditional mechanism on a SEX, for instance, or an asset that has nothing to do with crypto, you can list it for sale, but then typically some market maker steps in to provide liquidity in the order book. So, typically off-chain markets tend to be order books. Order books aren't really feasible on chain.
No.
And so instead of order books and manual market makers or in on chain, you have liquidity providers that provide the liquidity. And the way that it's priced for the swappers is through this AMM. So the AMM is really just a smart contract that determines the price a swapper pays for one asset or the other. And so when we say we're innovating in the AMM space, we're really just giving LPs, so liquidity providers of AMMs, more degrees of freedom, more knobs to turn in how they price the assets they put on chain.
Why is that important though?
It's important because there's LPs have different risk appetites, different objectives. And so like UniV2, the pricing mechanism, the pricing formula is super simple and very elegant. It's just the amount of X asset and the amount of Y asset equals some constant. And what that does is it lets you sell assets basically at any price. But that may be bad from a liquidity provider's perspective, because it's essentially like you going to an order book. So you going to your brokerage account and you're saying, I want to do, there's an Apple stock at 200. You're saying, I want to do a buy order at 2 million, right? like nobody, and you're actually allocating real capital there, but no one's ever going to buy Apple at 2 million. It's just a waste of capital. It's not efficient from your perspective because you're not able to collect fee on capital that's very far from price. And that was what, the very innovation.
Interesting. Thank you for explaining that.
Yeah. Okay. Sure. Well, that was kind of the epiphany that the Curve folks had, that Michael at Curve had, was, look, if I want to trade stable coins, I've got way too much slippage in a traditional UniV2 style AMM. And I have that slippage because most of the liquidity is nowhere near price equals one. you get liquidity at price equals 1 million, like literally liquidity there. And that's not helping trades. So the stable swap curve basically changed the pricing curve so that most of the liquidity was concentrated around price equals 1. And then UniV3 kind of generalized that so that you could have this concentration anywhere in price you wanted. And you can think of Mav as generalizing both of those. So you could replicate either of those AMM pricing strategies in Maverick, but then you can do a whole bunch more where you actually can do things like have your liquidity follow price as price moves left or right. So it lets LPs more closely approximate the sorts of things that happen in order books. And again, order books are just not feasible on chain or done on EVMs. Solana's got some things that kind of approximate it. But
I never understood how you'd build like an order book type of system on a fast type of protocol itself where you could do where I was thinking maybe you could do like some sort of like roll up or something, but I never understood the order book concept in real time. It just didn't make sense to me to have. And then you're right, there's all that inefficient capital that's sitting there. And I understand a little bit better kind of the history of how we got to where we are today. It's really, really interesting. When you're building this out, there's two ways to look at it, right? You're building this out as rails for a future product, or you're building it out for what tokens are trading right now. The tokens that are trading right now, a lot of them are really cool, novel, unique, really cool projects that want to do really cool things. But in the future, especially when regulations get a lot more clear, I think you'll see a lot more like security type tokens and maybe tokenized insurance products and tokenized derivatives of real world type things. In the back of your mind, are you thinking about that too as you're building?
I mean, I'm not sure it explicitly applies to Maverick, but I am super excited about that. And I think an interesting example, and just a little diversion here, like if you go try to get a securities backed loan from your brokerage account, so on TradFi, it's really cumbersome. You're signing like an actual, a contract written by lawyers that is hard to parse, and the brokerage account probably can take your can do a margin call anytime they want. So one of the cool things about DeFi is it makes those sorts of mechanisms all in code. So when you do an ETH-backed loan to Aave or a collateralized loan, you know exactly what the terms are, exactly when you might get liquidated or have a margin call.
Yeah.
And I think we'll see more and more of that sort of financial, what's been the province of fancy lawyers and arcane written rules. We'll see more and more of it migrate to DeFi. And that's going to be super exciting because there's no reason to have it be obfuscated through those big contracts like that.
I want to know what the size of the mortgage-backed securities market is. Okay, it looks like it's $500 billion around.
Mm-hmm.
So, mortgage-backed securities market is a perfect example because it's not only about when you have a healthy market for trading securities, especially mortgage-backed securities or mortgages that are not shitty ones like we had in 2008, but good mortgages that are underwritten and most of the time backed by the US government. When you have a healthy market for trading them, it leads to lower mortgage rates because a big percentage of the mortgage rate right now, especially in the US, a big factor into that current 7% or whatever it is around a percentage that goes in based on risk of what they see the interest rate over the next 30 years, and that factors into 10-year treasury. But also a lot of it is like that risk of being able to offload that mortgage if for liquidity if they needed to. But it's not efficient. The mortgage-backed securities market is so siloed right now. It's all over. There's different mechanisms, different liquidity. Basically, the better mortgage companies have to like find their own LPs that want to create their own private liquidity. And literally, some mortgage companies, if you call them up, you could literally buy mortgages from them. I could see that, that whole industry going on some sort of blockchain rail, and then Maverick being able to help make sure that's grown in the right way.
I think that's exactly right. And you mentioned the shitty mortgages from the crash in 2008. I mean, part of the problem was we didn't realize they were shitty until too late. Yeah. And it's because there was an illiquid market, right?
You're right.
I think your point is perfect. If that was on chain and there were liquid markets that were transparent, and you could see that people are taking out crazy collateralized insurance against, mortgages that had no value, and just doing sort of recursive lending loops, it would have fallen apart much more quickly because people who were actually buying the assets would have priced it appropriately. There would have been, it's just more transparent instead of just being off books, lawyer to lawyer sorts of contracts. It ends up on chain where it's really transparent. So you're right. So something like Maverick can be a marketplace for that sort of asset, or really any asset, and having the right knobs on chain in something
Yeah.
like Maverick's AMM is helpful.
Because you'll need to price things almost in real time. The more knobs, the better. Like every single day. Like imagine in a world where these banks needed to offload their some of their loans, and that could have prevented some of the bank runs that we saw. Well, the problem is that people go to do these bank runs is because we just with the lack of knowledge, if we don't know exactly, then we get scared. Now, when I go into my local credit union, it's funny. It used to be like on that big screen in the local Florida credit union. On the big screen, they would have like their new products, right? Like, oh, a new CD or come get a new auto loan or whatever, whatever. And now it's like they literally just have their balance sheet right there as you're waiting in line. You're reviewing the balance sheet of the credit union. Like they want you to know exactly. I just never thought in a world we'd see the balance sheet just sitting there. But it's crazy. But that's going to be all on blockchain rails soon.
I think so. And there's, you don't need to trust that their screen is right, right?
That's not even trust that document.
You just look at their wallet and look at the balance, and now you're sure of what's going on. And you can see, for instance, they're holding underwater treasuries, and
Yeah. There
they
could have been a market for that. Like, imagine if they took all the underwater treasuries and offered it to the consumer in some tokenized. That could have been really cool. I
Mhm.
would have been a customer of that,
Yeah, no, it's super interesting.
especially for people who there are people who really don't need liquidity now. It's like you have these trusts with hundreds of billions of dollars in it that just don't need their money right now. And so like they would be a customer of those type of things. But unfortunately, they were the ones with their money in places like First Republic, and they got scared. So it's a transparency thing. But I want to because we're running out of time soon. I want to talk to you about your previous thing. So you co-founded this company called the Bastille Network. In our research, I was very intrigued, and you helped commercial and federal entities uh, like repel cyber attacks based on like radio frequencies.
Yeah. So my background, I was a faculty member at Georgia Tech doing signal processing and wireless communications, machine learning research. And so, yeah, 2014, I co-founded a cybersecurity company. Well, one of the mechanisms, one of the vectors for a cyber attack is actually a wireless intrusion. So if your server has Bluetooth and you don't know it, and
Hmm.
somebody comes in, they can actually inject cyber payloads wirelessly into your corporate infrastructure. And so what we did at Bastille was we created sensors to sense where you have these wireless open endpoints, and so that you could go adjudicate them and understand if people are trying to attack your infrastructure through wireless cyber mechanisms. So yeah, I've got a big cyber background, and that's
Yeah.
another kind of fascinating component of crypto is.
I was like a script kiddie when I was younger, what
Okay.
they used to call us because basically the uneducated like gray hat hacker type people. I ran some like chat forums and stuff, but
Uh-huh.
like the best I could do was some SQL injection or things like that. I could never really. But the whole cyber world, there was I guess when I went to school or whatever in the early 2000s, it wasn't really an industry that people understood it really. This was like right post Y2K or whatever. So that's really, really cool. And then bringing a lot of that experience and what you're learning to crypto, it's interesting that you probably were in one of the most like exciting, unique industries, and now you jump to like, so it gives me comfort knowing that our industry is still very exciting for people.
Oh, definitely. I mean, crypto is
Um,
like you said, yeah, it's very exciting for sure.
so is Bluetooth basically for my phone right now? Is that the vector of attack?
It's a vector of attack that attackers can use. So there's some neat there's a thing called USB Ninja actually. So it looks like your power cord, your USB-C power cord plugged into your Mac, but inside the little bit of plastic is actually a Bluetooth transmitter. So if someone gives you this power cord, you think it's just a power cord, but actually you've just given them a Bluetooth connection, the attacker a Bluetooth connection into your computer to do keystroke
Oh my
injection.
God.
data
That's
exfiltration. So you want to
that's
detect
not
those sort of things.
that's bad because oh my God, I was just on a trip and I probably lent my charging cable to like 15 people and I probably got lent by other 15 people my charging cable.
No, yeah, you gotta have good cyber hygiene there.
I don't think anyone wants my identity though. It's a long story.
Yeah.
Bob, thanks for coming on the show today. I really appreciate it.
Sure,
Um,
Charlie. Yeah, thanks for having me. This has been fun.
but you were just telling me this is really cool. You were saying that you're working with Lugano and in Switzerland in this Plan B program, and you had a bunch of really cool people come and teach some courses, Adam Back and yourself and some others.
Yes, so in 2022, myself, Tether, and the city of Lugano entered into an agreement to start promoting Bitcoin education and adoption in Lugano. That is this amazing, beautiful town in Switzerland. And the progress has been quite good. In just 1 year, we had 250 shops that now are accepting Bitcoin payments in the city. And we did last year, was October 2022, the Lugano Plan B Forum. We had like 2,000 people coming, great speakers. This year we are doing it again the 20th, 21st October 2023. But in the meantime, we started with other educational activities. We signed an MOU with the 3 universities of Lugano, and we started this activity that is called the Lugano Plan B Summer School. It's 2 weeks. We have last 2 weeks from the 2nd of July to the 15th of July. We have last year we had a great success. We had 80 students. This year we have a bit more students as well, and some professors that are coming as students to learn about Bitcoin, about privacy, about peer-to-peer communications, about there are some seminars on legal stuff related to Bitcoin and compliance and similar. So myself, Adam Beck was another speaker. He taught about what is happening at Blockstream, the great things that they are doing, all their R&D and so on. Giacomo Zucco as also was one of the teachers. He explained we had the course Bitcoin 101. So how Bitcoin from the start to Lightning Network. We had Riccardo Mazzutti teaching about privacy and cybersecurity and many others. So we have students coming from Taiwan, from Croatia, from many places in Europe, Brazil, Argentina, Paraguay. So like 20 different countries.
This is so cool. I mean, our people are coming and they're learning. Are you asking them what they want to develop in the future, like what they see as the next what needs to be built on top of like Bitcoin and crypto and whatever rails that we're working on?
So yeah, the first of all, one of the reasons of the school is to trying to explain to young minds, but also to professors that they can at their time to teach these concepts in their universities. So we want to make sure that they understand why this industry started, with Bitcoin, a little bit of history, a little bit of the philosophy behind it. Is kind of a cypher punk approach. Although of course, is
Yeah.
I don't like much appropriation, but having Adam back is kind of already giving some credit for that, and teaching how to approach properly this industry, right? So you can, everyone has many ideas. They after the school they come with common ideas, projects that they can build, and one of the tasks in this school is to 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 form groups and come up with some business oriented ideas that a group of that like a sort of jury will evaluate, and there is a final prize, right? So but more importantly, they have to form interdisciplinary groups. Not all are developers there, right? So there are some
Oh,
developers, there are
okay.
people that study business, people
So they're
that
like
study
teams.
yes, Exactly. And so they should come up with some crazy ideas, and there is an evaluation process. They that will evaluate what they are producing at the end of the 2 weeks, and that is important because it will teach them how to properly approach the Bitcoin/crypto themes, and see how and being evaluated by respectful people.
I think also you and I, our heads are so in this 24 hours a day that sometimes it's hard for us to see what the problems are that need to be built from the outside perspective. And so you're getting this great like knowledge from these from they're not students because they're not like young. They're people that are in and they come from all different like walks of life and everything. So that I think that's one of the most fascinating things about it. It's like they're thinking that they're learning from you, but really you're learning more from them.
I completely agree. I was actually on during my first lesson. I exactly told them the same, right? So I tried to go fast on what I tried to teach them, because then I want to get their feedback. Coming from so many different countries, they have different experiences, they have different cultures, and you should never pretend to know, how other people live in the world. You should listen to them, right? You should hear their thoughts. You should
Yeah.
hear their needs. They should guide you, right? You cannot ever build something cool if you don't listen to people.
I want to take a step back for a second. You kind of run two roles. You're the CTO of Bitfinex and one of the founders of Tether and the CTO there. You probably have massive teams of people that are running things, and so are you focusing on more education now, or are you still running things at Tether? I mean that it's such a one of the oldest projects in the space. It's been around such a long time, and it really is the liquidity and the fuel and the oil that that runs our industry, not just from the stablecoin side of things, but also the support and the work you guys do on the Bitcoin side of things too. Uh, how do you feel right now? We're like exactly halfway into 2023. Are you happy of where we are as an industry right now?
Yeah, my role at Bitfinex and Tether is still, I'm being the CTO. I'm a guy that is extremely hands-on. So I like to code on Bitfinex. I still code the matching engine as the main
Awesome.
developer, and then we have on the Tether side, focusing on security and infrastructure, and then the whole punch, that is this peer-to-peer communication layer, non-blockchain based, but it's like BitTorrent for communications. And so I really like to be deep in technology, but also I'm taking a role that is bit more strategic and execution in the company, because it's um, I think I'm starting to have a good vision on where we should go, and I really like to be involved in many aspects of the company. When it comes to the industry, I think the industry learned a good lesson last year.
Yeah, you could say that
I
again.
think, yeah, I mean, I think it has been a tough year, right? And there's many companies struggled or went belly up. I think a lot of users started to understand that risks are real. That they should look, starting from Terra Luna, they should look deeper into the actual financials and economics of the different projects. I'm starting to think that not many projects will survive 2023, because we are already seeing signs of struggling,
Yeah.
but also we are seeing the strong projects, right? So we are seeing a reinvigorating shift back to Bitcoin first approaches from many companies.
Huge.
Um,
Yeah.
yeah, and that is, in a way, this, well, in my opinion, well, for me is a positive sign, because I think Bitcoin for the last 4 years has been neglected by VCs that focused mainly on higher returns that they could have with altcoins. So and that's why I really like what we are doing with Tether, because we are kind of focusing more and more on energy production and Bitcoin mining, and supporting like open source projects, Bitcoin and non-Bitcoin projects. So Bitcoin projects, but also like, for example, operating system building, and all the infrastructure that we think is going to be really fundamental for the long-term support of Bitcoin.
It's I had the marathon CEO on the show as well, and he like it was good to see so much love for Bitcoin again in the last couple of months, and putting my VC hat on, we invested in two Bitcoin scaling companies as well in the last year. So I definitely see that as something that's growing. There's a huge like hole right now in people trying to connect Bitcoin and other blockchains in the most decentralized way possible. And we can sit and talk about why that's so difficult, and there's different solutions, and I've we've studied and dissected almost every solution out there and the different projects that are trying to do it. And I'm sure you have your thoughts on that too. We understand, and my listeners understand the fundamental differences of how the Bitcoin blockchain is different from an EVM blockchain, but we're always on the lookout for like the ways that it can be done. But I guess like the most burning question I also had for you is there's I saw there was like there all these bridges and we're still lacking a good decentralized system to go from like one chain to the next. You have the IPFS system. Do you think Tether would ever launch some sort of decentralized system that enabled, because you already have so much development going on and you already have to integrate with these blockchains so heavily? Why not create some mechanism that allows people to just move assets very, very easily?
So that is a really good question. So you could solve that with, on every different blockchain, you could assign the issuance and burning capabilities directly to a smart contract and to an API layer that would allow people to burn on one chain and issue on another chain. There are projects like Layer Zero that actually, could do that for you. So the concern that I have is that from a security standpoint, it's gonna be tricky, right? So it's assigning the issuance and burning capabilities to an API layer and
Yeah.
not to a strong hardware wallet-based multi-sig system is kind of scary, right? So we are flying at really high speed at like 40,000 feet, and we want to make sure that the most important feature of Tether is security, in my opinion. So in a way, we would like to see more like community bridges with great security focus that are helping to bridge liquidity across chains.
Yeah.
I feel like Tether role should be a little bit, and I want to clarify this, but a little bit like the Bitcoin focus. That is creating a product that is so simple, and all the complexities should be outside of the product, not within the product. In a way,
I
it's
like
kind
that.
of the difference. It's the difference between Bitcoin and like Ethereum, right? Where Bitcoin says, well, I can do only a few things. That is basically just sending money around, and I have few of codes so that someone can create like a network, and all the complexities on layer two. On Ethereum, you have like smart contracts that are Turing complete, systems that allow you to build actual programs on top of Ethereum. But that also means that you have enormous complexity that you have to take care at the layer one, right? So as a designer and an architect, usually I prefer to go the Bitcoin way, where you
Yeah.
design something that resists to the wrath of God, but then on top of it, you can do whatever you want with the different, um,
Layers.
different trade-offs, also in terms of scalability, security, speed, whatever, right?
Do you think something like BIP 300 Would it ever go through with like side chains on the Bitcoin blockchain?
That's a good one. I think that eventually some form of that will go through. I think the on one side we want to make sure that Bitcoin will remain always as simple as possible, and also there is the narrative that Bitcoiners don't want to enable um, you know um, shitcoins to happen more easily
Yeah.
on Bitcoin.
Yeah.
But in the end, like, personally, is we have to make up our minds as Bitcoiners, because on our side, for example, and with Bitfinex and Tether, we are supporting a protocol. We are actually the ones that are funding mostly the development of protocol that is called RGB. That anyway is enabling scalability for assets that are not Bitcoin, right? So you can create your own assets and you can use them on chain, or you can use them through a Lightning network enabled protocol.
Hmm.
So RGB works basically similarly to Omni, but also well, not similarly as a concept to Omni, so can work on chain, but also can work as like network, so has like more off chain. So, and Bitcoiners love that, right? But if Bitcoiners love that, they should also love other alternatives that
Yeah.
come with Bit 300. So it's really a difficult trade-off, because one of the difficulties is when you enable some additional feature or scripting in Bitcoin, it's like a 10D chess game, right? So it's really hard to predict all the different potential outcomes of what will
Yeah.
happen.
And
Even
reverse
Taproot,
compatibility too, right?
yeah, even Taproot, right? So it's a great thing, and then the BRC20 happened, and so it's really always hard to understand, and so that's why Bitcoiners are always scared. And in a way, it's a great thing, because if we weren't scared of adding new things and changing stuff in Bitcoin, then we would more easily go
I
towards
agree.
yeah.
I agree. I do. Yeah, we would. We'd so the going back to Tether for a second, the a lot of people the narrative was that is that Tether is still like a trading pair for other coins and tokens on exchanges. But really, I think most Americans don't, and I say that because Tether is so widely used in the global world. But I think most people from Western countries don't understand how important Tether has become in supporting like local based economies, especially when you have like a lot of unbanked migrant workers, which support some countries' whole economies, right? Like what's going on there? Like what are some metrics? There's you know what I'm talking about.
Yeah. So Tether started in 2014 as that trading pairs, like, against a way to settle crypto trading transactions. But after the pandemic, during and after the pandemic, right? So much more recently, it's evident to the world that certain countries, especially some countries, emerging markets, developing countries, national currencies are devaluating really quickly against the dollar, right? So you think about Turkey, think about Argentina, Venezuela. The reality of things is that I wish that we would go really fast into hyper Bitcoinization and towards a Bitcoin standard. But the reality of things that is 99.99% of the people don't understand Bitcoin yet, and they don't have the time. So they have other things to do in their lives. They have jobs that are not um, they they have
Disposable
jobs that
time.
are, yeah, it's they are teachers, they are like swimming teachers, they are like the grocery shop owners, and so they don't have the time to get familiar with and comfortable, and I think comfortable is the right word, comfortable with the technology. And so we should we are giving with Tether a solution to them that is fixing their most urgent need. Is their need is that they are working for the entire month. They are working, they are waking up every day and going to work, and at the end of the month, they earn a salary that in dollar terms is less than what they were earning at the beginning of the month, right? So, or had at the beginning of the month. So at the end of the year, they worked the entire year, and in dollar terms in the bank account, they have less than at the beginning of the year. I mean, so this is the urgent need of people, right? So of these communities, they need a way to protect their family, to protect their wealth against something that is crashing daily, that is their national currency. And so that is what Tether is providing them. Tether is centralized, right? So I'm the first person that says Tether is centralized, is using the banking layer, is just a dollar on a blockchain, is nothing magic. So
Yeah.
doesn't have a magic wand, but is actually helping people. And so is the first step towards a more digital world, towards educating people that there is not they can keep money in their phone or or somewhere else apart from their bank. Because if you look at Argentina,
Oh, yeah.
Argentinians can only buy $200 worth of $200 in dollars per month through their bank account because the banks don't want people to get exposure to the dollar. And if they buy the dollars, it happened already in the past that the banks can seize these dollars in the bank accounts. So they are turning to Tether because they know that Tether can stay in their wallet and they can use these tethers to save and to be protected against inflation and the devaluation of their Argentina pesos. So, we created a product with USDT,
Yeah.
and we didn't have a marketing team until the end of 2021. So the entire world, well, ton of people, more than 100 million people are using USDT without us even doing anything, any advertisement. So it means that people really need that, right? It's not that we were good. It's people were really in need of something like that.
It's such a beautiful thing. It's kind of cool that you didn't need a marketing department. It's like Tether solved such a problem that it was like the demand always outweighed you. It's like you were just always making sure that the security in the system was working all these years. You guys didn't even have time to. Now you guys are launching like different stable coins in between different currencies. Do you ever think of launching uh, like a U.S. like a something that tracks a treasury note, for example, because then people can start getting interest?
Well, that would be a security, right? So
Yeah, of
if
course. Yeah.
and so the in the end, right? So think about it. The role of Tether is to provide a tool. Of course, Tether in this moment, I mean, we were open about it, right? So for many years, Tether made good money, but not, enough to, of course, to sustain and support well the business.
Yeah.
But right now, Tether is making a ton of money, and of course, in the future, if the interest rates will go back to zero, could go back to make less money. But the reason why Tether is still $83 billion is that basically there are just so Tether is not USDT is not servicing US customers. US customers are the one that get easy access to T-bills. So if they had money in a stable coin, they would withdraw from a stable coin, put the money in T-bills,
Yeah.
and enjoy a nice interest. But our customers are people that don't have access to these US banking rails. So they don't get exposure to the T-bills. So they just want to save. They are losing 50% of their wealth in dollar
So they're not
terms per year.
even like at the level of investing their money. They're just trying to make sure it doesn't devalue at this point. They just want to keep it, you know, they want to keep it inflating with the US dollar. They want it to not keep deflating. Maybe once these people can get out of like their whatever situation, then down the road you could see them wanting to do investments. But I see what you're trying to say. It's like you are really like grabbing people and helping them out. It's a big that's kind of what I was trying to get out here. It's you guys solved a problem for the Bitcoin community, but you ended up solving a problem for the global community.
Yeah. Yeah, that is well put. Is and really again, I don't want to look smarter than I am or like saying for my team. So
Sure.
we created something that had a simple use case and actually people took it and started using in many different ways. And that is, I think, one of the best things that someone could say of its own product, right? People are finding always new ways to use it, and it's been helpful by itself.
Well, Paolo, thank you so much for coming on the show today. I really appreciate you. I'll do a short intro about you when you hang up, just to give everyone a little bit of who you are. But what a beautiful conversation. I really appreciate the time.
And every time we talk is always exciting. So
Yeah.
thank you very much, Charlie, for having me.
That there's no such thing as decentralized finance. There's no such thing as DeFi if you're not doing self-custody and you're not holding your own keys. At the end of the day, there are a lot of outfits out there and a lot of projects that are on that like spectrum of decentralization, but they're not really that far down the road. And we see I think we just saw it yesterday or something. This another blockchain, another protocol, was it like multi coin or something like that, got hacked, and because like one or two people were holding the private keys for everyone else. So there's a lot of that going on, and we really need to understand that DeFi and what we're seeing with all of the projects and all of the yield and the different monetization opportunities. The more we relegate that to centralized finance, that's where we're going to have some of the problems that we've had in the last year. Today, to talk about that, we have Shingo and Adam Lavine, the co-founders and co-CEOs of Ethos. The Ethos platform has been around for a very long time. There's a whole community around it. Ethos, we could talk about what Ethos 1 was and the background behind that. But thank you guys so much for coming on the show today.
Thank you. We're really excited to talk about this, and we couldn't agree more about DeFi. There's no DeFi without decentralization, and that's a really important idea that I think often gets lost in all the noise in crypto. And crypto was founded on the idea that crypto was intended to be decentralized, but what we saw in 2021 and 2022 was this sort of rise in centralization, which I think led to a lot of the events we saw in crypto. So I'm really excited to talk about all of that and how we can reduce barriers to self-custody to enable the true vision of crypto.
What is the Ethos platform?
Adam, you want to take that?
Sure. So Ethos 1 was a self-custody wallet that we built, back in 2019, and we learned a lot about the ins and outs of how to make self-custody easy for people. That eventually got acquired by Voyager and was used for a while for their payment deposit withdrawal rails. That company is kind of a good case story in what happens. They decided to abandon self-custody in favor of centralization, and we all know how that ended. So after that happened, Shingo and I decided to take what we had learned and build a new next generation self-custody super app, leveraging essentially the mobile device as a hardware storage platform combined with a software layer that gives people access to do things with the funds that they own.
So there's like all these protocols out there offering really cool things that you can do with your crypto, whether it's like the old days of yield farming and being an LP and some of these liquidity pools and things like that. There's a lot of that, but nowadays we're seeing like tokenized treasuries and tokenized horse race betting and different things like that, fantasy sports. So there's like real yield and real products out there in the DeFi world that people want to have access to. But really, still nowadays, to access these things, you have to like give up your keys. You have to give your money to somewhere and place it on some platform. Just because, why? Has it just always been easier to use?
Yeah, I think that where we really started was on first principles, and we knew that the barriers to self-custody were part of the reason that we saw this rapid rise in centralization. And even still today, I think that the barriers to self-custody for many people is just too high. And when the barriers to self-custody are too high and too onerous and too burdensome, and we sort of coined a term called key anxiety, where like you place this big burden on the user to manage their own keys, this 24-word phrase that if anybody gets it, you're screwed, or if you lose it, you're screwed. And like the problem is that the self-custody is the centerpiece of all decentralization and all how crypto works, but it's just too difficult. And so we knew we had to start by solving that problem. We had to start by making self-custody simpler so that people could access all this stuff. Because you're right, there is a wealth of interesting stuff for people to access out there, and it's only growing every day. But so many people don't have access to that just simply because of these sort of barriers to entry.
So what's the solution? I mean, I still don't think that we'll get to the next level of crypto until, and it's not just a crypto problem, it's like an internet problem. It's a VR problem too, with like the hardware, AR, wherever we are with chips and AI and things like that. But what's like the solution for, I don't want to use a hardware wallet all the time, but I don't want to remember 24 words that, like, I don't want to give up my keys, 2 of 3. There's got to be a way to do it. And then how do you actually give people access to DeFi strategies without having to give up their keys?
That's a great question. So, I mean, that's kind of exactly what we challenged ourselves when we started Ethos 2. We said, well, so I think the 3 elements are, you have to have really robust, secure, but easy self-custody. And it's hard to nail all of those. And then you have to have an easy access layer, kind of a software hardware integrated layer. And you have to then make it easy for people to understand and interact with all these DeFi protocols. So starting with the first one, Shingo and I and some members of the original team, like Ankur and Tanuj, we all got together and we said, okay, how do we design a self-custody system? Like, how would Apple do it? If Apple was building a self-custody system, how would they do it, right? They wouldn't do it. They wouldn't say, here's a sheet of paper and write down 24 words and blah, 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 right? They wouldn't do that. So we created this technology that we called magic keys. And the idea behind a magic key is we just create the 24, the BIP32 compatible key, but that's sort of hidden from you in a way. And what you can do is you can shard your key and then encrypt 2 of the shards and save that as a backup file. And the reason that's such a leap is that the way you get your backup file back is you remember just a few words, like what's the make of your car, where were you married, things like that. And people look at it almost like a password recovery prompt. But what we're actually doing is we're using those as micro seeds to encrypt your shards. And I know this all sounds very mumbo jumbo and technical, but the net benefit is that you don't have to worry about your keys. And if you lose them, just have your backup file. We keep 1 shard for you. You put them together, you get your keys back. So you don't need to write them down. You don't need a hardware wallet. You don't need to, if your phone is lost, stolen, or compromised, you can get them back. There's protection layers. So that's where we started with the magic key technology, and also, basically self-custody kind of for the masses.
Yeah.
What I would add also is that we're decentralization maximalists when it comes to this kind of stuff. And, there are other systems that people have developed out there where, they'll shard the keys, but the keys are held with certain custodians. The key shards are held with custodians. And, there's concerns around governments being able to subpoena those keys and gain access to them. And in my view, that's not, that's not real decentralization. If you have a centralized party that still you're handing your keys over to, in this system, even though we've simplified the key management process, this user is still the only one that has the ability to manage and access and restore their keys. Even in the event that someone tries to hack into Ethos, or the government starts to subpoena, we don't have access to the keys. We felt that decentralization was really important.
So if I'm on the Ethos platform, how do you guys decide which strategies or what other DeFi platforms to add that allow, because a lot of them are not really decentralized themselves?
Mm-hmm. Yeah. Well, see, that's where we feel the users have the right to kind of do whatever they want with their funds. So we have certain ones that we plugged in, like we plugged in 0x. So if people want to swap, they can basically swap across it more or less aggregates from all the dexes. We have like Wallet Connect coming. So if you see something you like, you scan the QR code, but it's all your choice. And, people have the right to take whatever risk they want with their funds, and they should do their own homework. And then, in certain protocols, you send them funds and it goes to a smart contract and they do what they will with it. For Ethos as a company, we made a policy. We're not going to ever hold any keys. We're not going to hold any funds. We're not going to have any of our own protocols. We're just going to make a platform that's really, really good at letting people hold their own funds with an easy-to-use UI layer and then access to the world of DeFi.
One of the reasons that people hold funds not only that with these platforms is that it's easy to like keep your community or your loyalty of your customer. How do you guys maintain a community of people?
Well,
Well,
so
go ahead,
yeah,
Shingo.
I can take that one. I think that by eliminating key anxiety, that creates a lot of stickiness with the platform because we want the platform to be really easy and feel safe to use. And I think that crypto users are looking for that safety. They're looking for that security. They're looking for that peace of mind. And a lot of platforms just aren't giving them that, and they're not giving them that sort of that safety. You know, the sort of like
Yeah.
the Maslow hierarchy of needs, or the crypto hierarchy of needs, and the very bottom, it's I want to have my keys be safe, and I want to be this peace of mind that my crypto is safe. And I think that being able to offer that and being able to let people say tell people that yes, you're safe here, and you'll be able to do all the stuff in crypto, but you're not going to have that added risk of I'm going to get hacked, I'm going to lose my keys, I'm going to it's going to my funds are going to get lost or stolen. That I think is the fundamental base layer that you have to fulfill. And I think a lot of platforms have sort of skipped to the next steps, like, oh, we have to have the best offerings, we have to have we have to custodize the funds so we can give the biggest APY, all. But we took the opposite approach, where we said, let's give them that safety, let's give them that security, and then let's offer them a really killer set of features around that. And I think that people are really going to enjoy that and want to
I agree. Yeah.
stay on the platform.
Yeah, what you're talking about is curation, and a lot of it is curation is very important. Like decentralized curation should be what you guys are doing in a way. Uh,
Mhm.
2022 was a tough year. It was a bearish year. A lot of those platforms were getting hacked. The tunnels were getting hacked. The bridges, the mechanisms for moving from one blockchain to another. A lot of the projects were scams and centralized finance. We talked about Voyager, but there's also Celsius, FTX, BlockFi, still all going through their situation. I'm sure you guys felt that crypto lost its way. I surely felt that too. That we're all jaded. Now we're halfway into 2023. What are both of your thoughts?
It's what's really great about crypto is how enduring it is. Like it takes all these massive body blows and still just keeps going. So that's sort of a charming feature of crypto, I think.
Yeah.
I mean, I think you said we lost our way. I mean, all those companies you mentioned, they were all basically faithless custodians. And, much as people, sort of love to hate Gary Gensler, he has a point talking about qualified custodians. He's basically saying, hey, look, if you're going to take somebody's funds, what are you doing with them, right? How do you secure them? Like what happens to them? If you look at a lot of the thread of stuff he objects to, it's really you can look at it through the lens of custodianship and then sort of see where he's coming from. And that's the history of securities law is kind of, the history of, bearer bonds to who
Yeah.
holds the assets and all that.
But
So
it's so like there's no line that you can make just draw with that because like what about like Ledger's new product that they just launched where they're holding your keys but they're not really holding your keys? Are they a custodian or are they not? Like how do you draw the line?
well, I think, for me, it's do you own it or not? And you have to have your own definition of what ownership means. But I mean, like, do you own the money in your bank? Well, kind of, but somebody can take it away if they sue you. Do you own your house? Well, yeah, but if you don't pay taxes, you lose it. Like, what do you really own? And I think crypto keys are something that you can really own if the technology is set up to do that. And like Apple faced that with the FBI. Like, do you really own
Yeah.
the data on your secure enclave? And they made the decision, yes, you do. The FBI can't get in there. We're not going to let them because this is, a line you don't cross. And so that's I think the magic of crypto is it's one of the few things you can truly own yourself and make your own decisions with.
You bring up like an interesting conversation debate that I had with someone a couple of years ago, but Shingo, I want to hear your thoughts on that too, about crypto losing its way, but now we're in 2023.
Yeah, and also, I would echo what Adam's saying, that I think you have to decide what it means to own. And I think that's okay for people to
Yeah.
have different definitions. Like some people are like, okay, I'm okay handing over my keys to someone else. And if you're okay with sort of sharing ownership of your keys and the risk that comes with that, then, more power to you. But I think a lot of people are realizing that that's too big of a risk to take right now. And it's too difficult. And I think that a lot of people are sort of blaming crypto, especially in the mainstream media. They're sort of blaming crypto for these centralized collapses, but really centralized collapses like this are nothing new. We've seen it. You can go back all the way through history of centralized collapse after centralized collapse, and it's really it's human fallibility. And I think that the beautiful thing about crypto is that crypto has the ability to remove that human fallibility element. You can, you still have to rely on humans at some some level, but you can remove a lot of that human-based risk. And if you can do that, then I think you can create these decentralized systems where you've removed a lot of risk. You can actually make crypto can become less risky. The problem is
become about approvals and things like that.
Right, but I think we're still a little ways away from that, and I think that it's partially a technology issue, it's partially a cultural issue, where people are still like are reeling from all this, all these collapses and trying to figure out how do I, people are very sensitive in crypto because of all the hacks and everything, but where we need to get to is, crypto is really a way of removing risk. It was removing risk from the traditional financial system and putting it into the hands of every individual. Every individual gets to make their own decision. And that's what I think we mean when crypto has lost its way. Like crypto has lost its fundamental ideas and the reason that it exists. But there's still, in some ways, crypto proved why crypto needs to exist. This crypto was
every day
centralized collapse. So
there's an argument to be made that you don't actually own any crypto, right? When you maintain a private key, you just have the right at the time, at least with Bitcoin, to move some unspent outputs and move them around, unspent, but with more of a ledger-based system like Ethereum, where it's like an account-based, it's like kind of like Google spreadsheets, moving funds from one person to the next. And all these ledger technologies or whatever, but when you maintain the private key, all you do is like within this distributed system have the right to like move these units that maybe have monetary value or like security value or whatever. So I think that term ownership is not the right word we should be using, and that's where the SEC and the regulations, that's where the problems are. It's like, you're right, it's down to custody. But it's also because the future of token ownership, as we're seeing, it's going to be where like you maintain your token and you give an approval to move it, or you have the approval for a strategy to use portions of the funds that are in that personal smart contract. It's going to get even more ambiguous. So I don't know the answer. I'm just pointing out the problem.
And I think that's a good point, because I think the thing that you own is not the crypto, it's not the account, it's the private key, and there's always going to be some sort of secret, and that's really, we can get to like sort of account abstraction, but the idea behind account abstraction and all these different things is like the user has to have some sort of secret, and how do you manage that secret? And that's actually where we started when it came to magic keys and all that. Was there always has to be some sort of secret that the user owns, and I think you want to make what the user owns as small as possible. But if you can make that super secure, if you can make that really easy to manage, then you open up basically this whole sort of Pandora's box of possibilities for crypto. And
you really can. That's the beauty of it. You can do so much if we just don't think of it as like an account. Like you were saying, we have to look at it more from like an outside perspective, because I really want to apply identity and also voting and being able to like be in control more of like how your local government operates and things like that. But if we're thinking of these things as like password and private keys, we're never going to get past that hill.
Mm-hmm. Right.
No, that's 100%. I mean, because it feels to me that the crypto systems and getting to those sort of more advanced securities and identity management, KYC tokens, voting, that's all seems inevitable. That's just going to happen. And the status quo doesn't want a lot of that sort of transaction value shifting from TradFi to DeFi. But I just see it as inevitable. But the efficient secret management, I mean, kind of ownership equals secret management, right? And that's really that's really the needle we're trying to thread. And then with the other two pieces, we're trying to put a really easy UI for the things that people want. And they want to see prices, they want to see news, they want to see what their balances are, they want to see interesting projects to look at.
Yeah,
and we're
they
trying
do.
to, you know, make all that really easy and as few clicks as possible.
You're 100% right.
Yeah, and also I would add that I think the point that you're making is really poignant in that, you know, if you when you're getting back to that idea of ownership, you know, every individual sort of owns themselves. They get to, you know, they get to own
Right.
their body, they get to own their identity and all that. And crypto is sort of I think really interesting idea behind crypto is being able to extending that sort of ownership of self into the digital realm, and being able to, you know, being able to use these sort of secret and cryptography in order to enable that that sort of extension of self into the digital realm. And then you can have voting, you can have,
You're
you know,
right. Look, like you can argue that that movement of extending ourselves into the digital realm, it's happening, and it's almost like our jobs as the gladiators or whatever is to make sure it happens for all people in the safest, most secure, private way. Because it's going to happen, and it's going to happen like in a very centralized way, or it's going to happen in a way where people will have a lot more safety.
mm-hmm. Right.
Yeah.
And also I mean I think that's where that democratizing idea of crypto comes from, is that, you know, if every individual, you know, many individuals around the world don't get to own themselves, or they don't have rights from their own governments. And so if you can extend that idea of self-ownership to everybody in the world, then you get to democratize the world. The whole world
You're
gets
right,
to
100%.
gets those rights.
Guys, thank you so much for taking the time and coming on the show today. You've given us a lot of really good insight into why, if we're not making sure we're doing things in a decentralized way, then there's really no point in doing it at all, I feel like.
Mm-hmm.
Yeah.
Couldn't
It would
agree
just be
more.
another boom bust, you know,
Yeah.
centralization cycle. So yeah, I totally agree with you, Charlie. And thank you for having us. I mean, it's always great to talk to you.
So how was that, everyone? We gave you 4 guests talking about alpha, insightful knowledge. Hope you had a good time listening, sitting back. Maybe you drove in the car, had a cup of coffee, had a drink, whatever you did, had a smoke, whatever. A huge thanks to our guests, Bob Baxley, Paolo, Shingo, Adam, for shedding light on all these facets of DeFi, reminding us about the importance of decentralization. Decentralization is where it's always at. There's never a dull moment in the crypto sphere, and these experts have just proved that. Remember, everyone, these conversations mean nothing if they don't lead to action. So take what you've learned and apply it. Tell your friends, your family to listen to the show. If you've enjoyed the show, please do us a favor. Leave us a review. Hit the subscribe button, please. I love you all. This helps us to continue bringing in fascinating guests and spreading the crypto and Bitcoin love far and wide. I am Charlie Shrem. I'll be here next week for another episode. Until then, I'm signing off, and I'm excited to see you all again. Keep exploring, keep learning, and remember, in the world of Bitcoin and crypto, we are all students.